We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you guys to smash that like button. Let's see if we can get today's video over 40 likes. And here we are with the SPY continuing to range within this tight consolidation from 370s all the way up towards 380s. We were actually in a tight consolidation before here from 360 to 370s, and here we are breaking out and now tight spot here, and we have to talk about what's going on with the charts. And going into tomorrow, there are data points that we want to be aware of. We're going to break that all down in today's video. But today, while the SPY actually started to pull downwards, our SPY bot sent out a bear indicator at 10:05 a.m. and from that moment forward, outflows started to dominate and put options went up 100% plus within minutes, guys. If you guys want to receive this clarity and edge over the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected to the SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And this is my opinion and perspective alone, not financial advice, but volatility is here to stay, and to be able to maximize within the volatility, having a clarity and edge over the charts makes all the difference. It doesn't have to be 42 vision, but if you find value in what we share here and you want to become part of a growing community of investors using these resources to maximize in either direction, check out the link down below in the description to the 42 vision indicators and getting connected over to our bots. So the SPY, as I stated, in this tight range, coming back down to a key support level based off the history of the chart, and we need to see what's going on here. And the data points that I shared earlier in the video, as you see popping up, are going to be critical for tomorrow. We're going to break it all down, my thoughts and opinions. But before we do, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And as you see popping up here on the screen, these are some of the home runs I managed to find this week alone. And while it's not guaranteed to be this way every single time, we strive for opportunities like these every single day. So the home runs of the day were spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the three stocks I mentioned this morning. All of them gave jumps of 3 to 5%, 5 to 10% plus, but two of them turned out to be a home run. And the first one here is MOTS. We caught this one in the pre-market under a bull indicator. The inflow stayed above the midpoint with full strength here, full strength on 42 vision, and it gave a highest point of 50% plus within minutes to an hour. And then our home run from yesterday turned out to be a home run today, which was PEGY. We caught this one in the pre-market sitting sideways. It dipped and ran up within minutes. A highest point of 20% plus. Was pretty risky because the outflows were dominating. And then later in the day, it consolidated, inflows picked up, got a bull indicator, full strength on 42 vision, and it gave a highest point of 40% plus. And this is one of our home runs from yesterday when we mentioned it at $2, and full strength here on 42 vision, giving a highest point of 150% plus from yesterday to today, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. So here we are with the SPY, the SP500 index, and as I stated earlier in the video, actually ranging here from the 370s to 380s, and actually in this tight spot. And every time we bounce off 370, we come back up towards 380, and then we reject, right? And then we go towards 377 and we reject. But right now, the stock is coming back down towards 372, and I stated in yesterday's video why 372 is a key resistance and support based off the history of the chart. We're going to look at that together. And then the data points, as you see popping up here on the screen, super important data points to keep in mind going into tomorrow that could either make or break these charts moving forward, right? So that's what we're going to go ahead and cover here. I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected to the SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. Slots are now open for those interested. The link is down below in the description to the 42 vision indicator and getting connected to the inflow versus outflow. So here we are with the bear indicator popping up here towards the second half of the day, as you saw earlier in the video, and the SPY is actually in a downtrend from yesterday's peak at 379 and rejecting 380. Now, we talked about how important the support was. That is currently a support, but if we break through it, 372, 371, it could turn into a huge resistance level based off the history of the chart. So we're going to zoom out real quick and then we're going to zoom back in here, but you can also see how the outflows have started to dominate, and it was zigzagging sideways here, and outflows began since yesterday, guys, especially going into the aftermarket hours. I stated in yesterday's video I was going to watch if we crossed that and how we reacted at these levels. But let's zoom out and let's look at things here with the 1-day chart, because this is important. So when you come to the 1-day chart, it's almost as if a double bottom is forming, right? As you look at it here, it's coming downwards and it's starting to go upwards. It hasn't completed, but it's almost trying, right? But these transitions right here so far are pretty weak because this bear indicator is still in effect and no bull indicator has popped up in the process. And also the outflows are still dominating. Even though inflows are picking up, the outflows still dominate for as long as we're below the midpoint. As you could see here, it tried coming back up. It took several weeks until that bull indicator popped up and those inflows picked up. And once they did, momentum started to go with strength. And you could see how that full strength on 42 vision happened as well. And we're far from that. Another thing too is going into tomorrow, as you see those data points, we need to talk about what this means for the markets. And you could see how things are starting to slow down. We're kind of sideways here and continuing to reject every time we get closer to 380. And we're coming right back down towards support, which if we break through it, we need to talk about the next support level and watch these outflows as well. And we're under a bear indicator now on the 30-minute within the volatility, and same thing on the 15-minute since earlier in the day. So these data points, right? Going into tomorrow, we have unemployment numbers. This lets the market know where the Fed stands on their policies, right? If this number misses, right, the expectation is 3.7. If it comes out higher, it shows that the Fed's job is working, right? The policies are working on the economy. If it comes out lower, like 3.6 or anything less than 3.7, it shows that the Fed has some work to do, and that means that some aggressiveness could come back into the market, and everyone that's expecting a Fed pivot that made the stock market rally is now going to get canceled very quickly because of the volatility that this will bring and imply over the markets. It's going to actually shake things up and create that fear, uncertainty, and doubt. Now, as you see here again popping up on the screen, non-payrolls, guys, non-farm payrolls are going to be super important. Right now, the number is pretty low that's expected. Last time it was 350. Now it's expected 250. Anything above that is going to shake up the markets as well. So these two data points, everyone is going to be watching, and you can already see how a lot of people are going risk off, and the outflows are showing it on the 30-minute and even the 1 hour, guys. It actually finally crossed. Yesterday it was about to cross, and then the bulls came back up, brought it back up within the volatility, and then things sat sideways here, and the outflows began literally since the middle of the day, and they crossed here, guys. This is going to be crucial to watch tomorrow, how these data points affect the market and the sentiment, and if these outflows continue to go lower, or if we try to bounce right back up and it finds support again here at around 372. So I'm going to go ahead and share with you guys the key levels that I'm watching, because this is crucial where we are. The outflows have crossed on multiple time frames, not just the 1 hour, not just the 30-minute, even the 15-minute, even the 5-minute, guys. Right now it's trying to bring itself back up, but the 5-minute was very volatile and choppy today, It gave opportunities at the open of almost 100% plus to the upside and to the downside, depending on where you caught it and if you chose puts or calls. And that's what it all comes down to within the volatility, having that edge and clarity to maximize within the moves. But right now, outflows are dominating on multiple time frames. The only thing is the 4-hour, guys. You could see that the 4-hour went from a full transition from the dip area, bull indicator, and hit a rip area here, sitting sideways, and right now in dark green with red borders, transitioning back down. And if a bear indicator pops up to cancel this, or red bars, that could actually go ahead and push things down even further. And if these outflows continue towards the midpoint or cross it, it will definitely reflect into the charts, and tomorrow's data points will definitely make an impact on how this is going to move, guys. This is super important, as I state, and as I'm doing this video. I've been talking about how Friday was going to make or break this whole entire rally, and yesterday's data also did that as well, but both came out of nowhere within that volatility to shake things up, and it creates that confusion of, well, is everything all right? Why are we pulling back today? Well, the big numbers is tomorrow, guys. This is definitely going to make or break the rally here that we just got, and if we're going to come back down towards those lows that we recently saw, or even newer lows going into CPI and then going into the Fed rate hike of this month. If they rate hikes 0.5, 0.75, you know, at the end of the day, it's not a Fed pivot, which at the end of the day, a rate hike is a rate hike. Now, 0.5 is a lot better than 0.75 or a whole 100 basis points, but rate hikes are still rate hikes, and it just goes to show that the Fed has not pivoted if it happens, and the markets will get shaken up about that as well. So let's go ahead and talk about what's going on here. So we got a bear indicator, canceled out that last bull indicator, and we're currently right now at that support of where that bull indicator actually popped up, which is around 372. If we break through 372 and go lower, well, the first support is 371, and then below that is down here at 367, guys. That is going to be a crucial level here. As you can see, 367, 368, give or take, are key levels here within this tight range. And if that gets broken through, the next one is 363, and then we'll have to talk about lower levels as things play out. Now, to the upside, I'm going to be watching if this could break back above 376, and we definitely want to see this break above 380 if it actually starts to get some strength, and that these inflows actually pick up, cancel that bear indicator, and get a bull indicator in the process, and not just on the 30-minute, but also on the 15-minute, guys. We want to see on the 15-minute the bear indicator get canceled, and these inflows pick up back towards the midpoint or even cross it. And then also the 1 hour, guys, it's the first time it crosses back down in the last several days since this rally started. You could see it right there back on Monday the 3rd. Bull indicator popped up, full strength, slowed down, and a lot of choppiness back and forth here as outflows were transitioning outwards. They didn't cross to dominate just yet. That's what created that support there, that there was enough inflows to hold it up, and then it popped back up. But today it actually crossed, and if it stays below it or even pulls further away from it, that's going to reflect into the chart and have major impacts on volatility, on the stocks, and the overall market as a whole, and especially based off whatever this data goes ahead and shows the markets and makes the markets feel. I look forward to seeing your thoughts down below. As always, guys, thank you guys so much for watching, and let's make some money.